Hello, guys and gals. Welcome to 2023. Going to do a market update as we are about to start the 2023. Obviously, we did the market outlook for 2023, my views, and what we are about to see. It's something that I always do every year. And then there is going to be also one in the halfway through. But what an era. And go back to 2022, coming in, I talked about it, what I was expecting, how significant of a chance we have for a correction, but in a different market, a market that is really hedged up as we are about to get into 2022. How 3 out of 4 times when you have a rally prior year without touching a 200 SMA daily, 3 out of 4 times you're getting that 200 SMA daily back just immediately in the matter of not much. And then that's what we got in the beginning of the 2022. Talked about it in 2021 in September, November, and then right from the get-go in 2022. And now after a year of a lower high, lower lows, where we are right now here at that 3850. What's next? Obviously, there are so many opinions, so many talks. What I'm going to tell you guys, I don't want to go on a very long video. This 2023, if you really want, you can, we did that 25 pages of the outlook for the 2023 in the community. It's there in a PDF. What I'm expecting. I also did an update today on the market and where I think we are about to go in the next few weeks. Very important. 2023 is going to be really wild. That era of 2020, 2021 and the ARC and Cathy and things like that was a beautiful moment and it was a beautiful era. Now it's changed. Obviously, there is a bigger picture. There is a shorter time frame. What your role is as a trader, as an investor, or as an economist, right? That my macro econ is my expertise back from since long time ago. It's one of my favorite topics. But my job is a trader. How do I trade the market? And coming into 2023, I can look back and say how proud I am, and it was a very good year, very amazing year for me personally, and the only thing I see in 2023 is the continuation, building on that as a trader. And what we are about to see now as we are coming into the first week of January, we have January with full data set. We're going to see the first set of data coming in on Wednesday. It's a Fed minutes, and then we got JOLT numbers on 5th, and then we got NFP on 6th. We got the 12 CPI, we got the OPEX 20th, we got the FOMC at the end of the month, and then we have an expiry on January 18th. Now, where we are today, what do I see? Now, there is a time frame that the pivots are very important. And again, I think we are about to get into a year which is going to see, we are going to see a lot of sharp moves, and there is going to be a lot of tail moves. If you are going to stay biased on one side and thinking about bottom fishing, things like that, things can get rough. You got to be really agile. The market doesn't really give you much time. If you coming in every day, intraday, there's so many opportunities, as we do it every single day inside the community. We are trading it live. Everything is in front of you, and there's just an action and the trades. But what I see as we are about to get into the 2023, are we going to see a recession? That's a topic. Are we going to see a stagflation? And then if we see a stagflation, what is about to happen? What is that inflation thing? And then they think, oh, let's forget about the inflation, because we are trading the market. Yeah, inflation have that exact and direct impact on your volatility and realized wallet. It starts to compress the realized wallet. The wallet starts to go to the commodities, to rates, to the forex. Where are we now? I mean, let's say we are in that. What usually happens in the stagflation environment? That Fed's reactive function is out of the picture, so you don't have that very big X factor in your equation. That matters a lot, right? Like if you think that we're gonna V-shape, that's out of the picture. We are about, again, as I've been talking about this for a year and a half, almost 2 years. It's a cyclical and a structural shift in the market, right? Now, into the next few days, there is a moment that I think we got to be really you know, first of all, you got to have that open mind. Like from January 4th to January 11th, there is a five trading days that you have a significant less gamma on tape. Now, as we're getting into if the market breaks down below 3,800 before the 11th of CPI, and which is the 12, before the 11th, if we get a breakdown, things shift. If we don't, then there is a very good chance that we have a move to the upside. The move to the upside can go all the way into the OPEX. Where am I expecting? I am expecting what I'm seeing, the MBB, the 3915, with the very cap of the move around that 200 SMA. Now, if we break above it, things can change. But now your market is all about the 3800, 3915. If you get above it, then you have room up to 3970, and with the potential move to the 200 SMA. But that has to be, you got to get it closed on a daily candle above the MBB. Get there, then there is going to be there is going to be 50 to 55 points move into the 3970 with the cap of the move to the 200 SMA. That 200 SMA has been the pain in the ass. Whenever you got into it, even if you got above it, you never got follow through, and then rejection, lower high into it, rejection this time, and rejection. Most of the moves that we used to have is in the reverse GP and then reversal. Now, the reason that I say there's going to be a very sharp move coming, and it's about the NQ and the 200 SMA weekly is very important, and the top of the range, and that 20 SMA on a weekly side, and that upper trend line that I have on a daily candle. You know, the first zone that I am looking at is 1136, 11360 to 11400, but and then bigger picture is 11480 to 11500 that I'm watching, which is this zone on NQ. If we get above that 20 SMA and the 200 SMA weekly and close above it on a weekly basis, then you can expect the move to the 12K to 12,200. So now, if market is don't break below 3,800 by January 11th, there is a very good chance that it's going to go higher. Where do I see the market that we are about to go from here? I think there is a very good potential for a move to the upside if we don't get a breakdown into the OPEX. And then we see, like, we go up and then we start to come back down. I mean, if I look back on my MBB here, if let's say I think there is a good chance that we get into the move now. I mean, I'm considering that we don't break down below the 3,800 by next Wednesday, Thursday, not this one, next one, then there is a chance for the MBB and the higher range of this zone, which is also going to take you into the 200 SMA on a daily. And then there is a good chance that we, you know, sometimes around January 20th we get the next leg down. Where do I see the next leg down? I'm expecting the GP around that 3740, but I'm looking for the 3700 for the first potential zone. I think if this happens, there is going to be a sharp reversal post OPEX January into February OPEX. If we don't get that by that time, then things can get delayed into the probably 2 or 3 months after, and we're not going to see the major breakdown. But I mean, now it's all about the market. I think NQ is the very important one. If NQ doesn't break down sometimes around January 20th into the February OPEX, things change. But now it's all about NQ, and I think I am in the camp that we are about to see that. We get a move to the upside as a bounce, and then we see the next leg down. That zone that I have on NQ, where do I see it? I think the potential is for the 9,700 for the first zone, with the potential of 8 to 8,500 into the February OPEX. But again, it's all about that window. Now, there is this little window that we have from this Wednesday into next Wednesday. If we get a break below the 3,800 anytime from Wednesday into next Wednesday, then things can change drastically. I'm not in the camp that I am in the camp that actually that we're not going to see any January effect. You know, there is another really good reason for that, but NFP matters a lot moving forward, and could be a catalyst. So if we don't get a breakdown between Wednesday into the following Wednesday below the 3,800, expecting the bounce into the 20th, and then we are going to see a breakdown, in my opinion, and which is going to bring us lower. And if we get a breakdown between the below the 3,800 anytime from this Wednesday into the next Wednesday, and get a close on a daily candle below the 3,800, we can drastically shift to the 3,680 to 3,700 as a first zone. NQ, you know, right now your weekly 200 SMA is your cap move. Now, are we going to get above it or no? This is very important. Next few weeks, next 2-3 weeks, weeks is very important, and from specifically for NQ side. What I'm looking at, let's say crude, I'm looking at that. Basically, I'm gonna take you to the crude side, and on a daily, this is what I'm looking at. There's a channel. I'm expecting a reversal into the February, into this zone. My range, top of the range, is obviously, unless we get a close above the 20 SMA weekly on that candle, I think this is another rejection, and we're making just a series of lower highs, lower lows, and I think this is about to come here. I mean, I'm short-term bear on crude, long-term bull, you know, in terms of the structural, anytime post 2024. If I look at the let me just and just gonna go on it. US 10 years. What I'm seeing on US 10 years, I think there is going to be a mild correction from the 10 years, and for a higher low before the next attempt. I'm expecting a move to the back test of the highs into the February OPEX, which also take your TLT and the bonds into the lows and back test of the October lows. On a Dixie side, I am expecting a bottoming process unless we break really below the 103 and then lose the 100. I think this is going to see a curl back up, and that curl back up, my expectation is we are about to go for that 200 SMA on a daily, and then going for the at least reverse GP of the move sometimes into February. So now matters for the market. Are we going to see a breakdown right now, or are we going to see a move to the upside? Obviously, what I'm seeing here is this has been a series of the move that we've been witnessing, and I mean, on the NQ side, again, it's a bear flag. My expectation is, there is a good chance for a backtest of that zone, in that, unless we get a breakdown, anytime between Wednesday into the next Wednesday. If we don't, then there is a higher chance that at least into the January OPEX we see a rally, and then after that we come back down. And if we break down, anytime between the next 5-6 trading days, then we can start to have that leg down sooner than expected. This is the first zone I have on watch, with the potential of that 8K, 8,500. I think we are coming to back test the pre-COVID highs on NQ and ES, also on Qs. That's the zone that I'm having on watch. I think eventually we're going to hit that 237, and SPY, I think we are going to backtest that 340 pre-COVID highs. So this is all I have. I went through the details of what I expect in 2023 from different asset classes, and how I'm going to, and what I'm thinking for the next few weeks. So bigger picture, and then got the small time frame and the shorter time frame. Calendars, OPEX matters a lot as we are moving forward. So you need to pay attention to all the stuff that we have. Specifically, you can't be really a bias, have a biases. If you have a biases, this market is going to eat you alive. Hope you had a fantastic new year. Looking forward to see you guys in 2023, to trade with you guys. It's going to be an amazing year, and I can't wait for the start of the cash open tomorrow. Have an awesome day. We'll talk soon.